Hey, Angelo, how you doing? Great.
Hello, everyone. Welcome to the Nairametrics webinar. I am Ade Tayo, and I work with the Nairametrics team. The title of this webinar is Digital Investments for Gen Z, How to Invest with the World on Edge. This, for me, is a very relevant topic right now as we're wrapping up the first quarter of the year. Obviously, we have the Russian-Ukrainian war, rising price of commodities, and interest rate hikes across markets. And so in this webinar, we're going to be discussing how this influences investments going forward, especially leading up towards the ending of 2022. I would like to thank our sponsors, Bamboo, FPL Media, and Out of Home Advertising Company, and Qualcomm Markets for supporting us today. I mean, it's a great time as well because Bamboo is also giving out some free stocks for students. All you need to do is to register for the webinar, download the Bamboo app, create an account and trade with at least $20 on the Bamboo app. Send your valid student ID and Bamboo account username to info@nairametrics.com. A form will be sent to you to fill and send back. Then you get your free stocks. So right now, we're going to crack on with the main session. I'm going to cue in Ajibola Akamo, an investment analyst at Nairametrics, to introduce the panelists and moderate the session. Over to you, Ajibola.
Good morning, everyone. Like Tayo rightly said, my name is Ajibola Akamo. I'm an investment analyst for Nairametrics, and this is our quarterly events that we do for Nairametrics, and the title of this is Digital Investments for Gen Z, and the topic is how to invest with the world on edge. So this topic actually resonates with me because you could say that I'm a part of the Gen Z brackets, and you know, I really want to hear from our speakers, especially because we have the likes of Kalu Aja, Ajibola Lawal, Ola Dele, and also Dapo Umidire on the panelists. So let me introduce each and every one of them really quickly. First off, we have Mr. Kalu Aja. Mr. Kalu Aja is a certified financial educationist instructor, and he's an astute professional with extensive experience in the capital market, treasury investments, asset management, you name it. I'm sure if you follow Kalu Aja on Twitter, you will see a lot of tweets from him about the financial markets. He has over 22 years of experience in the field, and he also has an MBA from the University of Nigeria, Nsukka. He is also an alumnus of the Lagos Business School and a member of the Associates for Financial Counseling and Planning Education. Kalu Aja is also a writer, and he writes for many blogs and businesses, including Nairametrics, the likes of Nairametrics, the likes of Business Day. So I'll move on to our next speaker. His name is Dolapo Omidire. Is the founder of Estate Intel. He is in charge of providing data and research to support real estate investors in their decision-making process and creating the research tool on its online platform. He has spent over 2 years in Brawl, Nigeria as the lead researcher on markets and feasibility studies and for international and local institutes real estate investors with a asset under management worth over 38 billion. That's actually really, really big, guys. Is a member of the Royal Institute of Chartered Surveyors in the UK with a focus on commercial property real estate and holds a BSc in investment and finance in property from the University of Reading, United Kingdom. Like I said, guys, we have very, very big heavyweights in our midst. Then I'll be moving on to Oladile. She's a CFA holder and the founder of Money Coach, right? So a little brief history. Oladile has a BSc in accounting from the University of Lagos. She has over 12 years experience in finance. She covers security trading, treasury management, business development, business planning, and strategy. She is currently the Senior Vice President of Global Markets at Partisan Partners Limited, a fixed income brokerage firm in Nigeria. She is also, like I said before, she's also a CFA holder and was the pioneer chair of the Gender Diversity Committee of the CFA Society in Nigeria, where she spearheaded and advocated and implemented initiatives that advanced for the advancement of women in the financial services space. She's married with a son, and apart from spending time with her family, she actually loves to play tennis, she swims, and she also reads books. And lastly, we have my namesake. His name is Ajibola Lawal. He's a DeFi specialist. He is the practice lead at Kaito Capital. And he's a decentralized finance specialist with extensive cross-industry experience across commodities trading and also gaming. And he has worked extensively with private investors and institutions looking to explore opportunities for consistent, reproducible, risk-adjusted returns within the cryptocurrency space in general. He has managed millions of dollars in digital assets, and in the last few years with consistent returns, year-on-year returns. That's actually very, very big for Ajibola Lawal. And like Tayo said earlier, our program is supported by FPL Media, Kwaku Markets, and also Bamboo. So let's get right into it. So let's look at the topic of discussion right now. We're really talking about the world on edge. And that really resonates to me. Today, we're seeing a whole lot of, excuse me, we're seeing a whole lot of, what's the right word? A whole lot of happenings in the global economy and also in Nigeria currently. Now, the first thing I'd like to point out that has been on everybody's lips since the ending of February is the Russia-Ukraine war. Then we have also seen astronomical increases in the price of the crude oil in the markets. So I'll move to Ajibola Lawal quickly. Do you think the world is on edge?
100%. I think the world is on edge, but not for the reasons that you think. For want of a better expression, as you mentioned, the Ukraine-Russia war is but a symptom of the, how do you say, deeper existential issues, especially economically, that we're dealing with. And interestingly enough, the reasons the world is on edge by themselves, so they are very disparate little things across the board, right? And by themselves, they may not be world changing, but because we're globally interconnected through commerce, business, and investment, all these factors are creating not even a feedback loop, more of a feedback matrix, DC, that are compounding in ways that require us to be cautious in managing our wealth, in managing our business dealings, in conducting global business and trade. So, but in one sentence, to answer your question, Jibola, yes, the world is on edge.
Thank you so much for that, Ajibola. So quickly, I would move to Dolapo. So, the question for you is: are there safe haven assets that stand the test of time outside of these macroeconomic challenges that Ajibola Lawal, rightly pointed out? So I wanted to hear your own view on this.
Yes, thank you. I think theoretically, real estate is one of those types of assets. In periods of economic downturn or periods of economic volatility, real estate is usually one that can provide some portfolio diversification. What you see with real estate as an asset class is that it generally responds much slower to changes in asset prices and volatility. So when stocks might be falling really fast or fixed income might be going in the wrong direction, you see that real estate, it takes 6 months, even up to a year for you to see a really tangible difference in pricing. So in that regard, it can provide some form of safe haven. But I think within the Nigerian context, unfortunately, we have to look at it a bit differently. It's not in every textbook definition that you find currency devaluations, where where the price is moving from, say, 165 to almost 600 in the space of a couple of years. So when you think about that, it sort of throws some of those diversification benefits that you see, or those inflation hedge benefits, into the mud. So I think what that just means is when you're looking for safe haven assets, we need to look at the situation and respond based on the characteristics of what we're seeing. So even though real estate is a safe haven asset, I think in this environment, especially with some of the other dynamics like currency, etc., it makes it very difficult for you to just decide, okay, I'm going to leave it in real estate and just proceed. So if you are investing in real estate for safe haven purposes, you're going to need to find something that is really high growth and that can potentially outpace the current currency devaluation and some of the other things or problems that we are finding in our economy.
All right, thank you so much for that, Dolapo. So quick facts before I move on to the next question. The Gen Z age bracket is actually between 1997 and 2012. So that means the oldest Gen Z is currently 24 years old. Well, 25 years old, sorry. And the youngest is actually 9 years old. So I would hope you guys are encouraging your 9-year-olds, your 10-year-olds to start looking at investments, please. So yes, let's move on to the next question. This is for Kaluaja. Can you explain why investors, especially Gen Z, because of course the whole point of this conversation is for the Gen Z age bracket, should be wary of these current macroeconomic challenges? You know, the inflation, the interest rates, the GDP, the Fed rate hikes, all of that. Can you please explain why we should be wary of them?
Yeah, great. Thanks. And thanks for inviting me. So let's just take inflation, right? So what inflation is, I think, is the biggest enemy to investing, because what it does is that it steals your money. Just to put it in a very simple way, inflation steals your money, and you can't hide your money from inflation. You can't avoid it. It's going to affect you whatever you do. It reduces your purchasing power. So if you're a young guy and you work very hard and you have savings at the bank, inflation comes and it taxes those savings. It takes it away from you. So if you don't invest with the mind that I got to make more than inflation, then what's going to happen is that you're going to have less because you've done nothing. Your money's in the bank, it's safe, but it can't buy less than what you have. So it's very important to take a macro view. And I don't use big words, but take a macro view and say, hey, if I'm investing, I want to make sure that at the end of my investing period, what I have then can buy me what I had at the very beginning. Very important, yeah.
All right, thank you so much for that. So I saved the best for last. Oladile, can you please get ready for your question? So the question I have for you is, as an investor, you know, considering all your experience, you know, what are fund managers looking to place investments based on the current macroeconomic situation we're seeing? So what are big fund management, the institutional investors, the VCs, what are they looking at right now to invest in? You know, you being an investor, what do you think that is happening in that space?
So the interesting thing about investing is that at every point in time, there's always an opportunity. So there's the Russian crisis. So imagine if you're a gun seller, right? Or you sell bombs, or the oil prices are going up. Imagine if you have to sell, right? Or a commodities trader. So when investing, you always have to first of all consider the macroeconomic environment and then identify who is positioned to benefit from the current realities. So it's as simple as that. Think of it like when you see that rainy season is starting and then you see the guys selling wipers in traffic all of a sudden. That's the mindset, right? You sort of align, you don't come at that point to start, okay, we don't have snow, right? But you don't come at that point to start selling something that is not necessary in traffic, right? So that's the sort of mindset. So if we look at rising prices, we look at food inflation, you check out for the companies that can afford to adjust their prices in line with the increase in general prices, right? So that's how investors tend to look. But the most important thing to understand is that regardless of the state of the economy and all that, there is somebody that is benefiting from it. And your responsibility as an investor is to find that person and align with the person, institution, whatever it is, right? But as long as you are aligned with where the economy is going, you are fine.
All right, thank you so much for that. So, you know, based on what you said, I'm coming to Kaluaja now. What do you think? Is there a glimmer of hope for young investors, both Nigerians and all over the world? And what do you think they need to know before making an investment decision right now, considering all these factors that have been mentioned by all the speakers?
Yeah, I think the younger investors basically have a better future than us. Many reasons. So when I was growing up, I couldn't invest in America. There was no way you could invest in an American stock or stocks outside Nigeria. You could only invest in Naira and Nigeria. Right now, if you're a younger person in Nigeria, you can on your phone buy Tesla, buy GameStop, buy whatever, right? So you can diversify away from the Naira and from Nigeria, and you can invest really to match whatever that suits your fancy. So that's a big advantage for them. The second advantage is just information. They know much more, they can do much more, they can go on a course and have it on your phone. You know, we didn't have all that. So based on that, they've got more information, got more options that allows them to make better returns, right? There's crypto, there's stocks, there's real estate, there's bonds, all that is available, you know, even private equity, art, it's all available and it's all on their phone. Once you buy data, you're the global village. So I say they have, they're going to have a better deal than us because they just know more. And what I think they should know is to research, right? You've got to try to understand before you invest your money. There's a lot of very, very quick, I want to make money very quickly. What's the fastest way I can make 100%? And that's not investing, that's more like gambling. So I think you got to slow down, understand the asset class that you're investing in, do some research, and then put your money to work for you for the long term. Being young is a big asset. So you want to take advantage of that youth and invest for the long term.
All right, I think you guys heard it clearly. It's time for us to invest long term. And I know earlier I said that this
I think
was actually focused on portfolio.
There you go.
Definitely do that. So I would go on to say for Ajibola Lawal, I mean, we've been talking about interest rates, we've been talking about inflation, we've been talking about these macroeconomic challenges that we're facing today. But I wanted to ask you, what are the significant macroeconomic challenges that could possibly affect investments in 2022, the most significant one? What do you think is the most significant one that will affect investments in 2022?
I think in one sentence, the most significant macro challenge we have is the American economy, its policy response to the catch-22 that it has now. So I know that's plenty big English, right? And I'll just take it one by one. So as a response to the COVID crisis, March last year, there were some policy decisions made by the American economy to boost, to make sure that the credit markets weren't wrecked, also the asset markets weren't wrecked as well because of that massive drop in productivity. So because of that, those decisions that were made for want of a better expression, seeing a sunset in that, I mean, all of the conversations around raising interest rates, but just as importantly, scaling back on quantitative easing that was introduced essentially around that time. So as a result of all of that, all of those interventions, I would say, are the attendant results of the high inflation. I mean, obviously, high inflation, especially in the American context or in the developed economic context, is not just limited to, say, the economic policy. We also saw, or rather, we can also see how the high commodities prices also feeds back into high inflation. There's also the supply chain challenges as well, affecting how much we pay for goods and services. So in essence, the American economic policy is going to attempt to try and rein in that the inflation that is now very, very obvious to everybody. And the attendant effect of that will be reflective in A, the markets, B, and of course, when the markets are affected, you would also see an attendant effect also A, in liquidity across all markets, right? But just as importantly, we would also see an effect with employment rates, which would also play a role with productivity. So it goes back to what I was saying earlier about how small, how do you say, factors that would not be world changing by themselves would change things when they feed back into each other. To speak more locally, how does America changing its economic policy affect, say, a Gen Z person in Nigeria, for instance? Well, the how do you say now, the glut of liquidity that we've seen across all markets, right? Not just in America, but also a little bit in Nigeria as well, will, in being rolled back, would also see that even a Gen Z person in Nigeria would have an effect in, say, how easily they're able to access global employment opportunities, and so forth. But to speak more directly to the point, this how do you say, change in the flow of liquidity, right, would also affect the ability for the Nigerian government to access funding in and of itself. There's also, I mean, it's common knowledge, so to speak, now that while the Nigerian debt to GDP ratio is not as high, right, but the debt servicing, right, to income that we receive is at all-time highs. Do you see? And that affects our ability to be able to, for want of a better expression, run this engine. Now, by itself, in your small corner of the world, like, these things ideally wouldn't or shouldn't matter to you. But you can see how a butterfly flapping its wings, say, in New York, affects how you live and do business, say, in Nigeria. Do you see? So, like, these are the things that a young Nigerian or a young African across the continent should be aware of in thinking about how to invest, and also in planning not just their quote unquote investment portfolios, right, but their careers and their how do you say, yeah, essentially their careers, because at this age, like Carlo just said, right, that the biggest advantage any Gen Z person has right now is time. And I'll build on that and say that the biggest investment that you can make right now is in yourself. So this little nugget of, how do you say now, understanding like the bigger factors in the big picture should also reflect in how you engage your personal investments in your career, and of course, in growing your wealth as well. Thanks, Tripola.
Thank you so much for that. Remembering what Kalia just said, he mentioned that it was very, very easy for us today to buy stocks, buy foreign stocks from your the comfort of your house in Nigeria, you can easily use apps like Bamboo to actually buy foreign stocks, and even the local market. You can trade Nigerian stock right now from the comfort of your mobile phone. And I feel like that's a very, very big, a huge step forward for the Nigerian markets, And, that brings me to my next question for Oladile. My question is, looking at the increase in the, interest rates, especially, do you think that this period or this economic climate we're currently experiencing, do you think that there is high yield on investments? Do you think it's achievable in this period?
So when I think about investing, first of all, I try not to look at it short term. And I think it's very important for the Gen Zs to adopt that. When we say that time is your best friend, and you have that on your side, there's something called compounding that we're referring to. Now, if you are thinking short term, you won't take advantage of the benefits of compounding, and we can unpack what compounding really is later on if we have time. However, when it comes to investing, is it possible to get high yields? Yes. Even on the Nigerian Stock Exchange, there are some stocks that have delivered 40% return this year, but there are some that have delivered 20% loss, right? You also have to recognize that if you are thinking short term, you're sort of thinking like a trader. And when you're thinking like a trader and you are expecting high yield, you should also factor in the fact that the return is a reward for risk. And so if you are looking for high return, you should also be anticipating that there's going to be some high risk there. And what high risk means in simple English is that there is a high chance that you will lose your capital. So as a Gen Z investor, there is this thing where we want to double our money. And it's understandable, right? It's logical. But I think we are all in a good season. If you have been watching the news, if you've been listening, if you've been on Twitter, you know that a lot of companies that have offered high yield have collapsed in recent times. So it's a good experience. And the best time to have those experiences is when you are young, not when you have school fees to pay. So if you are learning now and you are seeing or you're learning from other people, you are in a good place. Or if you've lost money right now, it's okay. You are in a good place. You will make more. Right? But first of all, understand that high return is usually a reward for high risk. There are some times when a low risk investment can provide high yield, right? For example, when you have treasury bills that are at 17%, 20%, which we've seen in Nigeria, those are outlier situations. Or when you have situations where, like 2020, if you bought stocks in 2020 of very stable companies, and just by virtue of the recovery of the whole economy, you are able to double your money in a year. It happens, but those are outlier situations. On average, if you are thinking short term and you are thinking high yield, you are thinking very high risk. So own it and own it with your chest. You can't eat your cake and have it.
I love that response. Bonnet, you can't eat your cake and have it. So, Dolokpa, I didn't forget you. I'm coming to you right now. So, I wanted to ask you this because you're in the real estate space and all things real estate investments. That's why we brought you on board. So, the question is this: what are the deterrent factors, if there's any, to real estate investments in this current macroeconomic environment that we're facing?
Hi, Jibola. Thanks for the question. I think to begin with, probably one of the biggest challenges for anybody that's investing in real estate is the lack of data and information. Whether or not it's in the tough environment or in a good environment, I think one of the big problems we found in Nigeria is that information, data points to understand the direction of the market and quality information to make those decisions is not really available. Kalu mentioned that right now when people are trading stocks, well, right now in this environment, people can buy US stocks from the comfort of their phone, trade stuff on the Nigerian Stock Exchange really easily. That's due to, one, a lot of deliberate efforts to make information available and just open the markets up. I think we need to see similar activity in the real estate space to stop to balance out the deterring factors, which is one, the lack of data. I think the other is the fact that it's very capital intensive. Now, you can buy a stock for $1, $20, 100 naira, 50 naira. I mean, it's divisible, but with real estate, it's extremely capital intensive, and it's not really traditionally a gateway asset that you start off with. Most likely when you are buying your first property, you've been saving for many years, you've done some stocks, you've done some fixed income, you've done a bunch of other things, and then you take that capital and you put it into your first house, or I'm going to buy my first land or something like that. So I think one of the major things is that it's capital intensive. I think there are a couple of startups and platforms that are making it really easy by allowing you to buy divisible portions of a property, and then they share the returns. However, that doesn't really give you the utility of use. Oh yeah, it doesn't give you the utility. Say, okay, I want to build my house, or I want to have my own land, for example. So I mean, I think in general, those are probably the two major factors: the capital intensive nature of the asset, the fact that it's very expensive, actually, that's the better way to say it, and the fact that there's not enough information out there. Specific to this environment, I would say that right now, there is a lot of volatility globally, and volatility affects other asset classes. So volatility will affect the stocks, it will affect the bonds, and it's also going to affect other things like inflation. So when the cost of everything is rising, cost of living, my disposable income is reducing, I'm probably not going to make that a very expensive decision to buy land. I'm probably going to push it out a couple more months till things stabilize. So I mean, if we're talking about the deterring factors, if any, I'll say those were the main ones. However, as Ola mentioned, I think with real estate, it's always a long-term game or a long-term view. You shouldn't be really looking for a quick win. And I think for people who are Gen Z, extremely young, it is very, very advisable to get on the property ladder as soon as possible. So if you can start saving, start getting that cash piled up somewhere, whether it's in equities, in FX savings, and whatever, and you can eventually transition and buy your first or get onto the property ladder or get something in the real estate market. I think the earlier the better. So despite the deterring factors, I think there are a lot of good things that come with investing in property, and it's always better to start early, regardless of what the current macro situation is or the economic situation is.
All right, thank you for that. So I realized that I actually did not mention to our audience that this program is actually divided into 3 sessions or sections, sorry. And we're actually in the first section, we're talking about navigating macroeconomic challenges. That's why you're seeing a lot of questions from the macroeconomic point of view or the macroeconomic climate. We still have other sessions, which are the investment outlook, and also the investment strategies and risk mitigation. And we're about to round up this session with Ajibola. I'll take it the last question. So the question for you, Ajibola, is this: how is 2022 different from the past 2 years from an investment perspective? You know, in 2020, we saw the COVID-19 crisis, we saw asset classes crash at astronomical levels, from stock markets to the crypto markets. And then we saw a very, very significant rally towards the end of 2020. And then we saw a very, very significant bull run in stocks, cryptos. Majority of the major high yielding asset classes also rallying in 2021. So what has made 2022 different from those past 2 years?
So I usually try to explain things using analogies and illustrations, and the easiest one to reach for is, if you're familiar with it, right? Joseph and the 7 years of fat, you can liken that to the last 2 years. The very next maybe 3 to 5 years will look like the 7 years of, how do you say, lean cattle. There was a lot of easy money to be made in 2020, possibly into 2021. But essentially, as it stands now, except for random pockets, right, the party kind of is over. And so what does that look like in general. So it means like growth assets would most likely take a pounding. And in approaching investments from, how do you say, from any perspective really, you're thinking from the perspective of, say, a gladiator in an arena, right? And so you're thinking about everybody else in the pool with you. So what happens when you're at a jumping party? And I'm using an illustration that Gen Z folks would probably understand. What happens when you're at a jumping party and then the police show up? Everybody is heading for the exits. Do you see? So in a situation like that, do you want to be the person who is, say, mixing drinks at the bar? The answer clearly is no. Do you get? So in essence, like, to answer your question, really, it's different in the perspective that I think it was Ola that Ola that mentioned how, like, you need to own the idea that, look, if you are playing with high return investments right now on the curve, you're pretty much playing with fire. Do you see? I dare say that right now, it shouldn't even be in your mind. The focus right now is survival. Do you see? It may not seem that way now, but it will become clearer in the next maybe 6 to 9 months. So it's a time for caution. It's a time for looking at safe havens and, for want of a better expression, almost guaranteed returns. Because guess what? Everything will take a hit. Even the conventional safe havens, from bonds to real estate, maybe even precious metals as well. But yeah, in essence, the times like this really will be about who can survive. And survival in this instance is talking about the survival of your bag, as we young folks would call it, or the survival of your portfolio, so that when we're getting bargain basement prices again, you're not totally wrecked that you can't pick up the really, really good stuff at cheap prices. So I mean, yeah, it's the easiest thing to paint grim pictures, right? But it's also, okay, you know what, moving the thinking from oh, everybody's going to get wrecked, to, oh, you know what, we're going to have a Black Friday sale for 2 decades. You get what I'm saying? Thanks, Jibala.
2 decades of Black Friday sales. That's quite interesting.
No. Look, I'm using that as an expression. I'm not making that as a prediction. Yeah.
Of course. So thank you so much, guys. We're done with the first session. And we're moving into the second session, where we'll be talking about investment outlook. And I think this session is actually very, very important. So if you have your friends that have not yet logged into the session, tell them that this is the time for them to come in now, so that they can see the predictions that Kalu Aja, Ajibola Lawal, Dolakbo, and Ola have for the future. So please, guys, let's go right into the session. And I'm starting with Kalu. Kalu, bear with me, please. So please explain to us, what are the current investment trends that, you know, Gen Zs are currently invested in? You know, we hear a lot of talks about growth stocks. We hear a lot of talks about cryptocurrencies. We hear about mutual funds, ETFs, the likes. We've heard so many things. But I want you to explain to us, what are those current investment trends right now that's in the market?
That they're seeing or in the market? I'm not sure I got the question.
The current trends that we're seeing in the market. Where's the investment trend? Like, basically, what is the in thing in the investment market right now?
Oh, the in thing. The in thing is crypto. That's what I hear all the young guys talk about: crypto, NFT, robo trading, and those things worry me a lot, right? Because I think there's a focus on trading and not a focus on investing. So they're very different. But I think most younger people believe that that trading is investing. And there's also a focus on chasing returns rather than building a portfolio or trying to match your objective to asset classes, not to get too technical, but you should have, you can trade, nothing wrong with trading, right? But you should also have a portfolio, like, you know, I'm going to buy these stocks and I'm going to keep them here for a long term. So the two trends that I see that is going on with the younger people, focus on trading, focus on returns, and not looking too much at building a portfolio or having a plan. I don't see much in terms of a plan. All the questions I do get is, what should I buy? And what can pay me 10% a month? So I think there's this thing of, if it doesn't pay you per month, it's not really an investment. I don't know where that came from, but I think we have a lot of work to do. We have to cleanse the TL, as I say. It's just, there's a lot of misinformation about what investing is. And also, you see people don't invest in bonds because they say it doesn't beat inflation or doesn't make a return. And there's this lack of knowledge that, okay, you invest in an asset class because you want to meet an objective. And not everyone has an objective of, say, capital appreciation. Some might just need income. So that's what I see. And it's easy to change just about by education. Most people that say this just say it because that's what the person next to them told them. So there has to be a lot of information. On those same apps that we do buy those stocks with, there's always a place where you have education. And those apps actually teach you. I mean, even Robinhood, it's got you can go in there, you can see educational articles there. I think Bamboo and the rest also have a portfolio and the rest. So it's always good to read, watch TV, watch Bloomberg, watch all that stuff, listen to how they talk and how they analyze, and try to get into the mind of why they are saying, for instance, that if interest rates go up, stocks do bad. Why are they saying it? What's the connection? Then you can learn how the market operates, and then you can then invest in, I think, a better way. That's how I'll answer that question. I hope I did very well. Yeah, thanks.
I mean, you said cleanse the TL, so definitely you did justice to
I'm trying to use the slang, man, you know.
So yes, thank you so much for that. I think my next question now would go to Oladile. And the reason why I'm coming to you is because Kalu briefly touched on cryptocurrencies. So I don't want to go to Ajibola yet. I want to come to you straight up. So my question for you is, how can young people navigate the equity space, both foreign stocks and domestic stocks, of course? And you know, from your own point of view and from your own, you know, based on your experience, what stocks do you think will do well in 2022?
So it's very important to reiterate that there's a very marked difference between trading and investing. If we are in 2022 and you're asking me what stocks will do well in 2022, you are sort of trying to trade. And so these are the things that we need to clarify, right? And another thing that is very important, that for 90% of investment community, you shouldn't be trading. You don't have the knowledge, the skill, the mind, the chest to trade, right? Most people should not be trading. So, and the stock market is a long-term market, right? And so you should come with that mindset. When I say long-term market, I'm saying you are investing in a company. That's what you're doing when you're buying a stock. You are investing in a company and you believe that this company is going to grow over time to a point where the value that you see will reflect in the price of the stock. That's what you are doing when you're buying a stock. So think of an Apple, right? How many things can Apple do in 1 year that can make its stock price double, right? If you think of it from that context, you realize that yes, the stock price can go up, but it will take time. They announce a plan on 5G, they announce something on Metaverse, they announce something. Do you get? The day they announce it, yes, everybody's excited, but it will take a while for them to implement, right? So the first thing, which is very important, is that if you want to invest, you need to think long-term. When it comes to stock, you need to think like 3 to 5 years. Now, if you are young and you don't have much liquidity, then it just tells you that if you are actually thinking or looking to invest, and let's say you had 100K, it means that maybe only 20K should go into the stock market. Do you understand? Because you can afford to live without that 20K for 3 to 5 years and you'll be fine, right? Don't put money that you would need for next term school fees or whatever, right? So there's that part. But if it's about where stock market is going, first of all, I have to put into context the conversations we've had about the reversal of liquidity in the global markets, and the fact that, at least for the US market, we will see an impact, a clear impact. When you see things in the news like the Feds are taking up interest rates and they're expecting to do like 3 or 4 rounds this year, and they've already done maybe 25 basis points, those things mean something and they affect the prices of stock. It's not just news. Like, if you are looking to go into investing, that is like major information for you, right? So with that reversal of capital flows, this year might be one of those discount years, as against a year to be looking for how to blow in 1 year when it comes to stocks. Now, and I'll talk about the US market. Now, when we come to Nigerian markets is different because currently interest rates are low and they have been kept low by regulation and regulators. So what we are seeing is that even though the global economy is having a reversal because of higher interest rates and more expensive money, in Nigeria, money is actually cheap. So our stock market is doing well. And one of the things that's helped us is that we've sort of cut ourselves away from the global markets. Somehow it's a deeper conversation, right? But even in Nigeria, yes, stocks are doing well. There are some stocks, the general good ones are doing well, right? But would I tell you that in this year, you're going to make 30% return on a GTB? I can't say. But of course, there are some good stocks that you will find. So long and short of all I'm saying, when you are investing in stocks, you are investing in a company. Your first rule is to say there's going to be challenges. There are different things that we expect to happen, right? The world is going green. The gas prices are skyrocketing. A lot of companies, a lot of organizations, a lot of people will be looking for how to reduce their exposure, right? So they will probably be going to alternative energy. What are the companies that are positioned to provide this service? And let me invest in them. That's what you should be looking at, right? You invest in the future, not what is working right now. But then it's investment, it's not trading. If you want to trade, go and look for penny stocks. Look at technical analysis. This is a new low. Buy. When it crosses, give yourself your target exit price and you get out. But put an amount of cash that you can afford to lose. Like, I mean, if you lose it, you don't lose your shirt. That's the amount that you should put into that. I hope I was able to answer the question properly.
All right, thank you so much. So let me just highlight a few takeaways from what you said. You said, do not FOMO, basically think about long term. So when any company announces any news or anything of the sort, don't just jump right into investing, look at the long-term perspective. Also, another thing that you mentioned that stood out to me is that most people should not be trading. The focus should be on long-term investments. And also another thing that you also mentioned that, is quite interesting is our local market. We are quite bullish year to date currently. And fun fact, we are actually trading at levels that we've not traded since 2008 market crash. And that's actually very, very significant because the market is on its way to recovering from that crash. And it's a really, really big plus for the Nigerian market. So I'm going to the real estate sector. So Dolapo, I'm going to call you here. My question for you is this. Excuse me. What does the data say about young people and Gen Z buying real estate? And are there investment opportunities for them in that space?
Well, I mean, I think the data for Gen Z in general points to a general openness to investing in pretty much, whatever's available. I think right now, in the real estate space, there are not just the typical land or buy a house or things like that, which are obviously going to be very capital intensive. There are a few more startups that are, like I mentioned earlier, allowing people to buy portions or fractions of land or fractions of property and to give ownership. And that is from as little as 50K or 100K, which is small relative to the millions that you typically require to buy property. So, I mean, I think with Gen Z specifically, these are young people who have grown up in an environment, or they don't know an environment without the internet or smartphones and things like that. So they are generally more open to some of these new types of investment opportunities that I guess the traditional people or slightly older people might say, I'm not sure about that. or what's going on there. I mean, and this extends to things like the metaverse and crypto as well, like we saw, but that's not real estate. That's in another space. So I mean, I think going back to what opportunities are available to them outside the fractional ownership and the stuff that these tech platforms are providing, I think it's still quite limited, because outside that fractional ownership that the startups are providing, there is really nothing that is cheap. So if you still want to buy land, you still need a very large lump sum of money. So it's still difficult for young people to get onto the property ladder. And I think that's worsened because there's not as much information available. I mean, however, what we are seeing is that there's some exciting investment opportunities. And if I'm speaking about Lagos, for example, let's say in Ekpe, down the western axis of Lagos, that's in Badagry, where we're seeing very quick, very high annual levels of appreciation. So the appreciation of the land is growing quite fast. And that's not just in those areas, many others, but those two are popular areas that we're seeing for young people and young people looking to invest.
All right, thank you so much for that. You know, like you said, the areas in Badagry and Ekpe, young people are really pushing to those regions. And also another thing that you said that resonated with me was the fact that, you know, younger people are more open than older people. Up to tomorrow, I'm still trying to convince my dad to buy Bitcoin. He doesn't believe in it whatsoever. We always have the arguments every day, especially because, you know, one of my core coverages in Nairametrics is cryptocurrency. So he just doesn't understand what I'm talking about every single time. So yes, I'll be going to Ajibola Lawal since we're on the topic of cryptocurrency. So Ajibola, what cryptocurrency trends are emerging right now, and how do young people navigate cryptocurrency investments in general? We're talking the NFTs, we're talking the land ownership, we're talking every new thing that we're seeing in the space right now, even talking about reserve currencies. That's a new trend I've been on recently. Everybody's trying to create a new reserve currency and programmable stable coins. So please tell us, what do you think about this?
Okay, thanks, Jibola. So in answering your question, it also happens in context. I observed with keen interest the other panelists making very, very cogent points about how people are driven really what we now call meme investing. And the truth is, if we how do you say, if we downplay it and say, oh, you know what, you shouldn't trade, you are going to get wrecked, all of these things are true, right? But we're not necessarily helping the people that we should be helping, especially because we have a deeper knowledge and understanding of the space than regular folks would if we simply dismiss people's, how do you say, for want of a better expression now, drive for more as them trying to chase high yields. But if we look at things in context, and like for instance, I have a younger friend who made, he's under 25, made life-changing money. I won't say figures now, simply just trading the, how do you say, the GME and that entire MS, GME Ford last year, right? And I'm like, man, mate, I think that you should take your good fortune and your profits and take it off the table and just ride out on that for the rest of your life. Do you see? And so the funny thing is, he didn't get wrecked in the process, jumped into Dogecoin as well, did multiples also. And of course, I have friends in New York and SB who didn't do those kinds of numbers in 2020, 2021. And they would complain and be like, man, like this is unjust, this is, and so on and so forth. Now, the question is, what do you want to tell that guy's friends that they will believe you when pretty much he's done out of college looking for work, and he's, for want of a better expression, nest egg is what he used to flip multiples? Like, in essence, for me, where I'm driving at is not a for want of a better expression, reprimand. It's more of getting us, right, as people cognoscenti, for want of a better expression, right, to rethink how we approach advising the general populace about approaching these things. Not just saying, oh, yeah, well, think long term. Honestly, young people don't care about that. You get, like, more or less in thinking of more creative ways to bring people down to earth. I mean, the next 18 months to 24 months will do that, right? For most people, but at what cost, and at how many drops of tears? Circling it right back to cryptocurrency. So the trends of notes. So I'll take it in two ways. So there's the trends of notes, and then there's the trends that you should actually pay attention to, because A, you're not trying to get wrecked. B, you're trying to, again, like I expressed as saying, think long term and make sure that you're preserving your capital. I mean, number one on everybody's mind is NFT. So of course, people don't get it, people don't understand it, maybe most don't want to, because why should this JPEG or picture that I can copy, paste 100,000 times and delete it, why should it be worth $100,000? Do you see? Why should it be worth $1 million? That honestly is a conversation for another webinar entirely, right? But that is something that people should be aware of, not necessarily for the purpose of investing in, but you do need to understand how the world is shifting under your feet. I observed earlier, I think it was Dolapa that said something about like, oh crap, I can't remember. But long story short, like, just as much as Dolapa's investments in real estate, and he thinks that we can see real estate, I'll make you laugh, and maybe you won't understand now, but maybe in 5 years. But land in the metaverse is as real estate as your land in Ekpe and Badagry. Guess what? Maybe it's appreciating twice as fast. You wouldn't hear news of MTN buying land in Ekpe or Badagry. I don't know. Correct me if I'm wrong if they've done any of that. But MTN buying land in the metaverse is apparently newsworthy, and it's in rethinking how you approach what you think is of worth, GC, right now, as opposed to how those things will change in the future. So of course, yeah, those are the trends of note. Now, the trends of note that should be relevant to you as, say, a Gen Z person, anybody really, even as a Kalu Aja, is that it's just one thing, it's decentralized finance. So, and with crypto, right, it gets very, very distracting when people only just hear about, say, a Shiba Inu or a Dogecoin and so forth, right? And it's what I keep parroting to everybody who will take the time to listen to me. It's that, one, you have, if you are interested in making sure that your money doesn't fly away, right? There are ways where you can generate consistent returns, so to speak, right? Beating inflation even. And at the risk of talking our books here, like, this is what we're about, right? And all of these opportunities are in DeFi. So there are protocols and companies, some of them even registered with the American SEC, that return on your US dollars, crypto dollars, no less, but licensed crypto dollars licensed by the SEC again, that would give you between 5 and 10% returns annually. Of course, if you're looking at 10% returns annually, you are already beating current CPI inflation rates, do you see? And this is without being worried about whether Bitcoin is going to 100K or 6,500. You get what I'm saying? And these are the things that I am constantly advocating for people to dive into. Forget about the meme coins. Focus on quietly, slowly, and consistently growing your wealth. And of course, if something is denominated in the dollar, you are already shielded from the ultra high inflation rates that we're dealing with in the local context. You're also protected from currency risk as well, depending on how you insure your portfolio holding. You are also insulated from how do you say, depegging risk and so forth. Like it's as good as it gets, in my humble opinion. So yeah, the topics are dense enough that we can't dive into them right now, but it's worth you just diving down the rabbit hole as far as trends to note are concerned. Thanks, Chips.
All right, thank you so much for that. One outlier you pointed out about, people paying thousands and millions of dollars for JPEGs. In fact, the floor price of the Bored Ape Yacht Club, that is one of the top NFTs in the markets today, is actually currently $323,000 for one Bored Ape Yacht NFT. That is the floor price we are seeing today, which is very, very big. Putting that aside, I want to go back to Oladele. Should Gen Zs focus on growth or dividend-paying stocks? As if considering the fact that there is a long-term outlook in play. So should there be a focus on growth stocks or actually dividend-paying stocks?
Both. I won't separate. So there's a place for growth and there's a place for dividend. Growth is your license to blow. When I say growth is your license to blow, like imagine if you bought Apple when it was $10, right? And it was a good stock at that point. And imagine what it is right now, right? Those are the investments you make when you are young, that by the time when you are 20, that by the time you are 30, it gives you some massive returns. That's the idea of growth. Now, the benefit of dividend-paying stocks is cash flow. And cash flow is where you can benefit from compounding, right? Cash flow is where you can call on, you need some liquidity, some dividends coming, you're good, right? So I would say that when you are investing, just make sure that the companies that you are putting your money in have a future potential, right? Because why do I say that? There are some financial institutions that pay dividends consistently in America, but they're really flat in terms of their pricing, in terms of their stock, their market price, right? Because nothing is really happening, right? But there are some stocks that pay dividend, but they are still growing. They are matured, but they're still in tune with the future. You get what I mean, right? So I won't do that hardline growth or dividend, right? Have a mix in your portfolio.
All right, thank you so much for that. First takeaway was growth is your license to blow. I am definitely going to tweet that today. And also, another important point you made was to make sure that the companies that you're investing in have future potential. I think that's a very, very important point for people to understand today, because everybody is trying to dive into just all about anything, but not even looking at the long-term prospects of that particular company. So thank you so much for that, Oladele. So I'll be coming to Dolapo right now. So in terms of real estate investments in Nigeria specifically, what do you think the future is for Gen Zs in the next 5 to 10 years? What do you think the trend will be in the space in the next 5 to 10 years, especially now that you mentioned, the highly capitalized nature of the real estate space? Do you think that in the future, maybe, I'm just suggesting here, that we will see more easier ways for younger people, earning, salaries in Nigeria to be able to invest in the space, using not necessarily a huge capital, but something minute or small?
With real estate in the future, how we can see more Gen Z or the more young people getting onto the property ladder or investing, most likely we're going to see that through the indirect markets, which is like stocks. So right now there are a few listed real estate companies that can give people who want real estate exposure that exposure without having to spend ₦1 million or 500K or 10 million naira on a piece of land. That usually comes with REITs. Unfortunately, real estate investment trusts in Nigeria, the tax structure and a bunch of all the other legislation just makes it very difficult for people to want to actually set those up. So right now, the REIT industry in Nigeria is not performing very well, and the few companies that are on there are traded very thinly. And yeah, it's not something that people are interested in. However, I think in the next few years, we are definitely going to see a lot more activity in that space. There are a lot of property developers, big private equity companies that have developed multiple assets and are looking for a way to exit. So what we're going to see is that one way or another, some of those assets are going to come onto the market, probably through some type of listing. And that will be at least one way that young people who want exposure to high quality real estate assets to get that exposure. So that's one way. I also think, as I mentioned, young people and Gen Z, the Gen Zers are a lot more open to new ways of investing. So things that are available in the metaverse, just even outside, just buying typical land, and the fractional ownership startups I mentioned. Somebody asked in the question box, what is one of their names? I think one of their names is Keble, K-E-B-E-B-L-E. And that just allows people to buy, a small portion of a short-let property or things like that. I think with those, we'll need to see how they play out over the next few years. While some are very safe, we need to be careful, and you need to make sure you're doing sufficient due diligence before you decide to go into these types of platforms. But I think to re-answer the question, I think one, REITs hopefully in the next few years, if the pressure applied can actually materialize into some change in legislation, we'll definitely see that on the stock exchange. If instead of thinking, I want to own a high quality real estate asset and you have to buy it yourself, you can just go and buy shares in that company that's on the stock exchange, and you can get exposure to the growth of their rental income. The second is, I guess, the more prevalent trends right now that the Gen Zers are a lot more open to. So things in the metaverse, things startups that allow fractional ownership to startups. But I think in that space, it's important that because it is new, we are a bit cautious, and you make sure that you're doing sufficient due diligence before making a choice, or just before leaping at those opportunities. But I think that's what's available for the Gen Z, and that's where the trend is most likely going in the years ahead.
I hope you guys heard that. That's where the trend is going in the next few years. So that's a very, very important key point from Dolapo. Thank you so much for that. I'm coming back to Kaloaja now. How do these investment trends that you mentioned earlier, the whole cryptocurrencies and the likes that you've heard, the metaverse, the NFTs and all that, how do they differ from other generations?
If you want to get technical, just lack of fundamentals, right? When I want to buy stocks, it's more like you look at the earnings, P ratios, all that kind of stuff, and then you can get a price compared to intrinsic value, and then you buy or sell. With an NFT or with cryptocurrencies and all that, there's no intrinsic value, right? As a matter of fact, there's no profit. It's more of a momentum play. So stocks are going up because everyone is buying. And because everyone is buying, the stock keeps on going up, right? So GameStop, for instance, let's talk about GameStop, or what's the other one? I name skip GameStop and the other guy. Those are worthless companies, right? Or they were worthless and they were on a short list, right? And they were to die. And then the GameStop Wall Street Bets boys brought them back to life, took the stock so high that the company was able to raise money, and now the company is doing an NFT marketplace. I might get saved, AMC, yeah. The market exists, Schumpeter, to take away dead wood, so new companies can come in. That's what short selling is. But right now you have momentum, so those dead companies stay alive. They become zombies. Either they become zombie companies, or like maybe GameStop, they escape. So that's the key difference there. Fundamentals seem not to matter. I mean, Hertz was bankrupt, but the price kept on going up. So you would buy a bankrupt company and the price would go up. Matter of fact, the bankrupt company tried to sell new shares, and wrote in the prospectus, this company is dead. If you buy this share, you are buying nothing. And still, people are going to buy until they stop the sale, SEC make them stop the sale. So it's a thing. You can't say there is no, if the market crashes tomorrow, the next day to pick up again, because everyone's going to go in and buy. So you cannot plan. There's no, all that normal ways the market works no longer applies anymore. And that's why it's so difficult now. And to price the market or to say this market is a dip and all that, people will buy. There's too much liquidity in the system. So like NFTs, I know, but come on, all that stuff is, it's liquidity. It has nothing to do with the asset class, right? If liquidity disappears, NFTs are going to disappear, right? But there's liquidity. So if you buy it today, you're going to make money because somebody will buy it from you tomorrow, and then it keeps on going up. But that's really what the market is, right? Price discovery. So we're discovering the prices of NFTs and crypto. So when I say they are worthless, doesn't mean the price won't go up. There's momentum, the prices go up, but in terms of the fundamentals, there's really nothing there. That's the main difference with now and perhaps back then, yeah.
All right, thank you so much for that. I know Ajibola has something to say, but one thing that stood out to me was your talk about lack of fundamentals. Like I said, anytime I have this argument about cryptocurrencies with my dad, he also mentions what is the fundamentals, where is their books, let me see their financials, because he's a chartered accountant by profession. So he always asks me this thing, and I have 9 out of 10 times I have nothing to show him. I can only show you this, the volume Bitcoin did or something like that. So that's the only thing I can show you. He says that there's nothing he can invest in that. So he always says that. So I know Ajibola would want to, I'm sure maybe you will have a contrary opinion. But my question to Ajibola is this. Looking at long-term, perspectives of the cryptocurrency space, is there a possibility for young people to actually invest in this space with little risk, the way we see investments in bonds or treasury bills? Is it possible in the cryptocurrency space?
Yeah, I mean, again, a conversation between myself and Mr. Carlo on whether, say, I mean, in all honesty, I don't care about meme stocks, but about whether, say, the crypto space or NFTs have fundamentals would run, Jibola, as you probably know, would run the entire time that we have. But I guess to put it in one sentence, that we don't understand a thing does not take away from its veracity, or that a thing's paradigm has changed from thoughts and processes from 20, 30 years ago does not render it invalid. This same argument, it doesn't have fundamentals, was applied to the QQQ, the big shots now. Everyone from Facebook to Google at some point, maybe even Amazon, DC, and the response was always Amazon doesn't have the fundamentals, they are losing. But all those, the critiques of the tech stocks of yesterday are either silent or own some of those stocks now. With that said, it's a smart enough dissent critiquing that it puts everyone but people who truly understand the space on the edge, and it helps sift people who can truly answer those questions from the ones who can't. But more to the point, the truth is, to answer your question in one sentence, Jibola, decentralized finance is the way that, left to me, I'd say all young people should just leave aside buying tokens for now and maybe into the near future, or say the next 12 to 24 months. More because there's the opportunities for upside are kind of slimmer now, especially if you're not like a trader like myself, GC. But, I mean, in engaging with DeFi, you provide your liquidity in the form of your crypto dollars, and you quite literally can go to sleep. GC. I don't know that there are any local vehicles in Nigeria that that return between 5 and 10% on your US dollars GC that you can engage with as a retail investor. End of. So if you're not greedy and if you're a long-term thinker, then DeFi is your answer. Thanks, James.
All right, thank you for that. So because this is the Outlook's what's it called section of it all, I have a general question for every single participant to actually respond to. And the question is this: what sectors are you guys bullish on? It could be an industry, it could be a sector, it could be a particular asset class. What are you bullish on in the long term? So I'll start with Kalu Aja. Can you please tell us what you're bullish on in the long term?
How long is long term? Like,
let's just say 5 to 10
years. 5 to 10 years?
Yes.
Yeah, I mean, so everyone is going to be in renewables, right? One way or the other, like, so that thematic space, either it's renewables or something with healthcare. But I think renewables is the easy one, right? Because we see where it's going to go to. So it's wind power or solar power or anything around that, either battery storage. That is the easy thing to say you want to be in. Carbon trading, anything to do with taking us off fossil. You know, a year ago, literally a year ago, I would have argued that the EIB has stopped investing in coal and oil. They had the COP said natural gas was dirty, we shouldn't invest in it. Now, all the European countries are investing in coal. I just looked at the reports yesterday. The largest power generator in the US is natural gas, followed by coal, which means when you drive your Tesla car, it's powered by coal. So, and it's not going to go anywhere with what will happen in Russia. So we might have to tweak that renewable story all over again and see if really that's a place to go to. But I would say that's the natural place to go. And of course, anything to do with what's the Roblox, all that kind of metaverse, gaming, that is going to be huge. I see that the metaverse is going to be massive. And everything we see today is going to disappear in, say, 5 years, and a new thing is going to come. Because we're just like how the internet was when we had Netscape, and now we have Google. So the real metaverse folks haven't come, but they're going to come. So that's also going to be a good place there.
All right, thank you so much for that. Ola, how about you? What do you think?
So I totally agree with Kalu on his expectations, but I'll just give some background to what drives my thoughts. So the expectation is that in the next 20, 30 years, we're going to 10 to 20, we're going to 10 billion, right? So everything that needs to support 10 billion plus humans, right, is going to blue, right? Sorry for the use of the word blue, but like technology driven. Because I mean, by the time you have that many human beings, and most likely more human beings will have digital devices, which is why metaverse is going to be a thing, definitely, right? Which is why depletion of the ozone layer, we're going to do more of that. So things that take us to a more sustainable life and existence is going to be more of a thing. Even though there's a lot of research into it, but we are not sure how it's going to pan out, but it is still a very valid point. Gaming, entertainment, healthcare. So we're going to move from health to public, from like healthcare itself to like public health, preventing as against curing, right? So things like that. So if you think of a massive number of human beings are going to be on this earth, land is going to be a scarcer resource as we go along, right? So things like that, that's so I'm trying not to isolate it to one thing, but if you think about everything that needs to support the massive crowd we are all going to be in a while, those are the things that are going to be, and anything that, and technology is going to be the major driver of our existence as we go forward, which the whole metaverse thing and all the companies that are at the forefront of it right now, they're going to be a thing in the future.
All right, thank you so much for that. Let me come to Dolapo next.
Okay, I'll speak specifically on the real estate market and the Nigerian real estate market. I think the sectors that are going to be bullish in the years ahead, one, residential. The residential space, there's a clear deficit in housing in Nigeria. So over the next few years or in the decades to come, that's going to be a sector that requires quite a lot of investment and is going to, and that's supported by demand. We're currently seeing that young professional housing and student housing are very exciting sectors for people to invest in. And that's because Nigeria's population is very skewed towards the youth. That's going to continue to be the case up until about 2050. So student housing and young professional housing are sectors that are very exciting. As the world becomes a lot more digital and as the world becomes more digital, two sectors that have seen a lot of interest are industrial and data centers. So during COVID, for example, pretty much every property sector suffered, but people who invested or owned data centers thrived because everybody was at home. A lot of people were consuming more internet. So data centers is one, and on the industrial side, we're seeing that a lot of people are doing deliveries. People are investing a lot more in that infrastructure that requires industrial to thrive. So industrial, data centers, and young professional and student housing are the sectors that I think we're bullish about.
Thank you so much for that. For Ajibala, you're next.
Yeah, so I'm going to take an interestingly different approach to it. And the reason is it's a rule of thumb that maybe 5 to 10 years. Once any one thing is in the mainstream conversation, then you're kind of late to the party. So how do I say this now? The people who made the most upside from crypto were folks who were around with us from 2019, possibly even into 2020. And this is why, like for instance, anybody who probably follows me on Twitter would have seen that the rushed transition to renewables, simply because it was, the mainstream conversation, all right, would have seen that that we're going to see a rollback, so to speak, of, like Kalu mentioned, the coal mines and manufacturing using coal. With that said, so for me, it's one, I'm bullish on exponential technology for the reason that that Ola mentioned, right? There's a whole bunch of people coming on stream, even though I believe we won't hit that 10 billion as fast as we think we would, because again, right, population growth numbers are plummeting globally, even in Africa. So exponential technology, I'm talking space manufacturing. So possibly your next batch of Teslas from maybe 2030 or 2035 would probably be made at a Tesla manufacturing gigafactory out in space. Of course, for all the reasons, things are faster. You don't have environmental worries in space. Of course, because things are lighter, you can lift things and build things much faster, probably at a factor of 2x than you would in building them here. Of course, you'd also have to solve for getting your materials back and forth from your space station. So exponential technology, everything from fully understanding gene editing. So we've done amazing work so far with using CRISPR-Cas9. But in the next 5, 10, 15 years, we would even get better at, so far we've solved for sickle cell. We'll see all of those interventions become even more mainstream and solve the sickle cell problem and maybe even Crohn's disease for people across the world. I'm also bullish on African real estate. It's interesting that I'd say that, given how I've said, look, everything is going to get hit, even the traditional stuff. But it's this, with climbing CO2, would see colder winters, would see plummeting agricultural output from the latitudes far out, quote unquote, from the equator, right? And what that would then mean is people who can afford to will move to warmer climes, right? And a very small secret, especially if you look at Mercator maps, is that the largest land mass of any continent is Africa, and we have the best weather in the world. Do you see? So that's a big reason why I'm bullish on African real estate. And of course, a little secret as well is the fact that one big reason that Caucasians and people of other races have been reluctant to move to Africa in their numbers, really, aside from everything else that Africa is dealing with, has been malaria. Now we have malaria vaccines. So with those in place, the value of African real estate, especially in areas with a good amount of stability, will go up. And of course, the last thing I'm bullish on as well is agriculture, but specifically sustainable and efficient agriculture. Again, because the value of real estate would spike up, especially after, say, a period of depression, right? The question would then be, do you put people on this land where, do you grow food on this land where you can put 100 million people? And that's where the place of sustainable and efficient agri and growing more agricultural output with less land would come into play. So these three core areas are the spaces that, though it sounds crazy now, but it will become clearer in a couple of years why I'm so bullish on them. Thanks, Chipola.
All right, so from you, African real estate, medicine, and also agriculture. Thank you so much for that, guys, for the brilliant outlook. And excuse me, we're moving into the last session, and it is investment strategies and risk mitigation. So this session really, really resonates with me because, you know, a lot of people, especially novices in the space, I get a lot of emails, I get a lot of text messages, especially on Twitter. How do I invest? What is the strategy you use? What are you investing in? People always trying to copy what I am doing. So I think it's very, very important that we actually address this particular session. So I'm going to start with Ola. The first question I have for you is, how important is an investment strategy for a novice or somebody new coming into the space?
My very simple answer is that you dress for where you're going to, right? You can't say that you are going to the beach and you wear boo-boo, or maybe you can, or you can't say you're going to the bank and you wear a bikini, right? You know, there's just this subtle thing of this is where I'm going and there's an appropriate path, right, to get there, right? But then I think the first thing, let's pull back, you sort of need to know where you are going, right? A goal, something that is tangible. There's a lot of talk around setting goals, right? It is very important. It gives you the right amount of ginger for work. It gives you, you might not be earning as much, but if you say that in 5 years' time, I want to have this amount of money, right? Or this level of wealth, or this value in stocks or whatever, it tells you what work you need to do. So that's even the first thing, right? So set your goal. But then, like I said, you dress for where you're going to. The moment you decide on where you are going, right, the next thing is, what actions do I need to take to get there, right? If your near-term goal is to go to school in 2 years' time, right, you can't, and we're talking about a depressed stock market, a possibly depressed stock market this year, and you know that, okay, in 2 years' time, let's say we are in 20, so maybe you want to go in September 2023, right? The truth about it is you're going to be paying school fees sometime January, February, April 2023, right? You can't be planning to buy stocks in an expected to be depreciating market, if you get my point, right? So there's that part where you dress for where you're going. You sort of, you have to consider, where am I going? If you're someone that has a lot of dependence and needs cash flow, then you have to factor into the kind of investments you want to do. It's either you accommodate those cash flow by putting your money in things that generate cash regularly, or so that nobody disturbs you, you put your money far and say, I want to be able to lock this money away and say I don't have it. So it's almost so it is very important not to just look at what the next person is doing. Some people might be planning to relocate, so their investment decisions should be aligned with it. But if you are here and you have some leeway, then you can do more Nigerian investments, right? But if you are relocating in October, everything you should be doing should be in USD. You should be converting everything to USD and actually possibly leaving some in liquid assets so you can draw on it if you are tight on cash when you leave, right? What am I saying? Like you do at work, like you do with everything in life, like you have to plan. You have to create a strategy. I can't say it too much. If you listen to everyone that has spoken, even when you're talking about, okay, someone entered into the investment and he got out and he banked his profits and he this, he that, have a conversation with him. He probably was lucky in terms of getting the returns at the time he did. But in terms of understanding that, okay, I've hit something, I need to do something because I'm going somewhere. Do you understand? That mindset needs to be there. So before I overflog it, it's very important to have an investment strategy.
All right, thank you so much for that. So Ola, the audience took note of you saying the word blow repeatedly. So, you know, a lot of people have been saying you and the word blow. So, but one thing I took away from you is basically dress for where you're going to, dress for your destination. You can't basically wear a bikini to a bank, of course. And also having an investment goal. What is your goal and where you want to be based on your investment strategy? So thank you so much for those key takeaways. So I'm coming to Kalu Aja because also I've seen this question on the on the chat box. You know, you've mentioned dollar cost averaging in the past, and I want to ask you, can you explain a little bit more about dollar cost averaging and also how it is critical for, you know, Gen Zs and other young investors and even every investor, be it Gen Z or not, whatever generation you're in, how is it critical in implementing dollar cost averaging into your investment strategy?
Great question. So a dollar cost averaging, so in Nigeria, it will be Naira cost averaging. It's just buying the same amount of stocks on a set interval. So you might buy 500 Naira of, say, Nestle every month or every week or every set interval. It's just a way for you to be consistent, not to look at the price, right? So you don't want to time the market. You just want to build that portfolio. So you say, hey, if I get paid once every month, I'm going to take 1% or 2%, and I'm going to buy a particular investment, or I'm going to save, and then I'm going to just invest. Why it's important that it creates the habit of saving. I think that's the most important thing. The hardest part in investing is the savings part, the not spending part, because it takes a behavioral change. You might know Tesla is good, but if you have no money to buy the dip, then you really can't do anything, right? So the way you want to basically save money, then when you save money, you then invest. So dollar cost averaging forces that behavioral change you to say, I'm going to do this every month or every set period to buy. When you do dollar cost averaging properly, right, it eliminates the highs and the lows, right? It sort of smooths it out for you because you're buying at the high, you're buying at the low, but you're building that portfolio. So, I mean, if you don't know anything about investing, you don't want to read all that stuff, just buy an exchange traded fund, like a mutual fund. Buy a mutual fund and then just do a Naira or dollar cost averaging just every month or every week, just invest. That's a very, very easy way to invest. Pick an ETF or mutual fund that tracks maybe a broad index or broad asset class and just keep on buying it. Ignore the noise in the market. If it's going up, that's fine. If it's coming down, that's fine. Just buy. It's consistent. It makes you disciplined and you're able to save. That's what I'll say.
All right, thank you so much for that, Kalu. That was a brilliant answer. So I'll be coming over to Dolapo now. My question is going to be on the mortgage space. So, you know, mortgages are quite hard to get in Nigeria, especially because of the high interest rates attached to it. So, you know, as a young individual or any individual in general, what would you advise me? How would you advise me to navigate this space, really?
The answer is pretty short. It's incredibly difficult use mortgages to buy a house, because the interest rates are so inhibitive. You probably pay for the house 4 times over before you finish. So it's a problem that's not just facing Gen Z, it's facing pretty much everybody. So I mean, I think the best way is probably to just start saving and trying to acquire a piece of land that you can potentially flip in the future, or you can develop yourself, because if you are relying on mortgages, it's extremely expensive. The other way to do it is by getting on the National Housing Fund, the NHF loan. Those interest rates are sub 10%, so they're lower than 10%. I think it's between 6 and 9, I'm not so sure. But those are in themselves also very, very hard to get, and there's a long process. And I'm not sure I've ever seen anybody actually tap into it, but they say it's available. So, I mean, I think, yeah, it's a problem that honestly, the Sky currently don't have a solution for. But like I mentioned, probably trying to get on the property ladder yourself by buying a house, or seeing if you can struggle and get part of the National Housing Fund loan.
All right, thank you so much for that. What really stood out for me from what you said was the National Housing Fund loan, because this is literally the first time I'm hearing of it. So definitely that's something that I personally would look out for. And I'm sure our audience would also look out for that. And you mentioned that the loans on it is less than 10%, if I'm not mistaken. Yeah, so definitely would look out for that. So my next question will be going back to Kalu Aja again. So my question for you is this: what's the minimum amount? Because a lot of people have been saying, can I start investing with 2,000 naira? Can I start investing with 100,000 naira? Should I start investing with 1 million, 10 million, all that? But for me, my question is this: what is the minimum amount the young investors can start investing with? And based on looking at the person's economic situation of, not a lot of money coming into their hands, being the fact that the person is a young person, what investment area should they consider for as a fresh investment starts, really?
Yeah, so 2 ways to look at it. You can go percentage-wise. You can say, I want to invest, just do 1% of your income, right? You can do it that way. But I think the fintech apps have made it easier, because they do this fractionalization of shares. So the one Tesla stock is about 1,100 right now, right? So to buy that in Naira, let's not even convert it. That would be supposed to sleep. So if I were to buy that, I could buy a Tesla stock with $10, literally, on the app. So with $10, that's about 5K. You could buy a Tesla stock. I mean, I got a dividend for less than $1, and they still bought me a tokenized, or what's called a fractional share of the ETF. So if you can buy for $5, that's 2,500, right? That you can buy. So there is no barrier anymore to start. What is important is that you're able to save. That's how I'll say that. You can buy anything with any amount, and I think 1,000 naira should be minimum for you. And on those fintech apps, you're able to get in. Yeah. So I don't think that that's going to be a problem for us going forward, right?
All right, thank you so much for that, Kalu. So I'm going back to Ola. My question for you is this: what are the best risk management strategies for anyone in general, including Gen Zs, of course, in the investment environment, considering the current economic climate that we discussed in the first session?
So to Gen Zs, the truth about it is the younger you are, the more risk you can accommodate. So I think you're 20 to 30, as long as you are upwardly mobile, you are working hard, you have a job, right? You can afford to take risk. I think that's even the season to take risk, especially when you probably don't have family burdens and all that, right? So I would say just keep a little in liquid assets or stable stuff, but do your stocks, do your cryptos, explore, right? And improve on yourself, your personal valuation, make yourself sellable, right? Because I mean, even if you lose your job, if you're well positioned, right, you know that you would get something, and the world has really changed. You can literally be in Nigeria and be working anywhere, right? So when it comes to risk, I believe in diversification. Diversification across stocks, VC, crypto, because I mean, I don't see any reason why you'd be in your 20s and you're not exploring that space. There's literally no reason, right? At least even if a small portion of your portfolio, you should be in that space, right? So break it down. And then even within stocks, diversify, even within venture capital, diversify across different sectors, different organizations. The idea is to try different things. One or two or three of those will do very, very well to accommodate the ones that don't do so well, right? So my major strategy for a Gen Z would be to diversify, but then also take risk. But keep some in liquid assets, because life does happen. You know, things like having insurance and stuff, they are very important. You know, if you have an organization that provides you with healthcare and blah, 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 then you're good. And then have emergency funds. But apart from that, please do take risk, especially that's the time to take risk, because even if everything goes right, you have time to recover.
All right, thank you so much for that. You know, what you said actually really resonates with me, and this is one of the things I actually preach. Like, if you're, you're 16, you're getting into the investment space, you should be a high-risk investor. That's what I always say. You need to be a high-risk investor. You have nothing to lose. You're still living in your parents' house. You have basically 3 square meals given to you for free. There's no reason for you not to, go out there and take a lot of risk, and not just in investments, but also in yourself. That's the time where if you want to explore being a musician, explore that option. If you want to be a pianist, explore that option also. So not necessarily from the point of an investment perspective, but that's by the way. I'm going back to Dolapo. Reason why I'm coming back to you is because this real estate space, everybody is trying to tap into that space. And, especially me, and I've gotten a lot of nuggets from you, Dolapo. So I want to ask you this: how can a young investor start in the real estate space? And I know we've talked about how it is highly capitalized space right now, but is there like a minimum value that I can put out there? Should be for example, my own savings target. Okay, save 10 million, then you can get into the space, or save 20 million, that kind of thing. So I wanted to get your own perspective on that.
Sure. Good question. I think to begin with, it's probably best to set an objective. Some people are investing in real estate just as an investment. They want to make money. And some people are investing in real estate as a utility, and it's somewhere they actually want to live in and build a family. So, if you're looking at it as an investment, not a utility, there are so many more options. During COVID, for example, I wasn't investing in Nigerian real estate. I was investing in US REITs, and I'm so thankful. I think Kalu shared a post there about US REITs being among the top 3 performing in the past year or so. I started investing in, I think, warehouse stocks during COVID, because there was a lot of investment in distribution. Everybody was ordering things online, so they did very well. So if you're thinking about investing in real estate from just an investment, not a utility, you can invest in REITs to get that exposure, real estate investment trusts, and they're available across the world, but also in Nigeria, but the Nigerian ones aren't doing so well. There are other opportunities that make it much easier to enter from a very small amount, and you can do $10, $50, $100. So that's a starting point if you're looking at it as an investment. But if you're looking at it as a utility, it becomes a lot more expensive, because you actually want to live there. Oh, I want to build my first house. I want to build a house for my father, my family, whatever. And I think that's where you definitely need to start off other asset classes first. So you start investing, start saving, start putting money in equity, start putting money in fixed income, start saving in FX, and then you can eventually transition into, okay, I've bought my first piece of land. Right now, depending on where you're looking, within Lagos, if I put a boundary around Lagos, there are people that are selling small plots of land for 500K, 600, 700. So that could be a starting point, but I think before you do that, due diligence is super, super important, because it's a very expensive place, and it's not somewhere you want to make an investment and make a mistake. It's a very expensive mistake if understand whether or not it's a utility or you're actually just looking for investment return. And if you're looking for investment return, you can look everywhere around the world, and there are very, very exciting investment opportunities in real estate investment trusts. If you're looking at it as a utility, I think What we do actually as State Intel, we provide information on multiple areas, performance, etc. Check out platforms like that to do due diligence, understand where is high growth, and then decide where you want to take a position. That's what I would say if you're looking to.
All right, thank you so much for that, Dolapo. So I know, Ajibola, you're itching to speak, I know, but I just need to finish up with Kalu and then I'll come to you. So yes, Kalu, my question for you is, of course, aside, Bamboo, what other applications are available for young people who are trying to navigate the investment space, both foreign and domestic, of course, and how are they different from, the ways of the past, I would like to put it.
Yeah, great. Yeah, so the broad overview I would say is this: if you are living in America, try to use the American apps. If you're in Europe, try to use the European apps because they have all this tax stuff. Like if you try to buy BTI from the UK, it's funny because the way they tax those. So that's the first thing. But I would say if you have a social security number, I like Robinhood. I like it a lot, right? Apart from that, I like Passfolio. And full disclosure, I do a show for Passfolio. But Robinhood, Passfolio, it was in Nigeria, tons of them, Chaka, Bamboo, Trove, and all that. I think they're all pretty good. What's his name? Money, Cowrie-wise, they are more into collective schemes. I think that's where they do pretty well. So get something that would force you to save. I like the ones that you can take direct deposit from your account. So you could say, from my salary direct, I want to pay to this app. The app will just take your money before you get it. And the app can help you invest in an ETF or a mutual fund or a stock, and you just build up. But I also like that you can reinvest your dividend. So if an app would allow you to reinvest your dividend, that's going to be a big plus because that way, that's how you build wealth. If you're a young man, buy your mutual funds, reinvest your dividends. You don't want to take it out and spend. Just put it back in, reinvest it, let it just keep growing and forget about it, right? That's a good way. So I would say if I want to choose an app, it would be an app that allows me to do direct deposits. So my paycheck can go in there directly. Number two, allows me to do dividend reinvestment. Very, very important. I think these two things for me are how I'll select my app. The rest thing, everyone has the rest of they give you all that mutual funds and all, but those two for me are what you should look out for. Yeah.
Thank you so much for that, Carlos. So like you said, two major things to look out for: direct deposits and also dividends reinvestment. That's actually
they're called DRIPs, DRIPS. So just make sure they have those two. Yeah, it's very good. Those are the two things you want to get from a fintech app.
Awesome. Thank you so much for that. Ajibola, you're basically taking the last question for this session. Well, second to last. I still have a general question for everyone to answer. So my question for you is this. I mean, we've been talking about high risk, low risk investments and whatnot. So as a young person, what would you say your percentage of your investment portfolio should be apportioned to high risk investments, like the cryptocurrency space, for example? So what would you say a percentage of your portfolio? Is it 10%? Is it 50%? Is it the whole thing should be in high risk investments? Let us know what you think about that.
Okay, so there's a personal finance table that kind of addresses this. That is what we say between 20, but in essence, when you're young enough, your how do you say, your risk exposure should be much higher. For instance, Jibola, your risk exposure will be much higher than Mr. Kalu's, but definitely different from Ola and Dolapo's as well. But more to the point, in all honesty, my personal approach to investment in general always comes from the place of capital preservation, as opposed to just one for one of the expression, portfolio growth. And the thinking around that is this, right? on a long enough timeline, you will grow your portfolio. Do you see? So it's then a question of, are you alive and around for that? Or is your portfolio alive and around for that? With that said, and more to the point, and I guess as it's relevant to my space and Gen Z folks, is that I mean, I would urge a crypto exposure that doesn't ruin your brother portfolio strategy. So anywhere between 2 and 10%. That's on the one hand. Guess what? Even in that 2 and 10%, you do need a strategy that addresses crypto itself. What your portfolio are you allotting to cheap cryptocurrencies? What portion of your portfolio are you allotting to your Dogecoins and Shiba Inu coins, for instance? For example, there's no reason at all that you are holding a significant portion of your crypto net worth in Shiba. Zero, especially not in times like this. No matter how much you think that, oh, you know, it's going to go 100x. Do you see? So, but yeah, but most importantly, a bigger portion of what you're holding is, I always advocate anywhere between 70 and 80% should be in decentralized finance, because this is the portion of your crypto portfolio that you're not trying to get over creative with. You're not trying to get too, how do you say, too much of a cowboy with GC. You just really want to consistently, most times quietly, grow what your position size is. And of course, the people who enjoy discount periods the most are the people who were able to protect and shield their portfolios from volatility. That's it. I hope that helps.
Yes, it does. Thank you so much for that breakdown, Ajibola. So my general question for you guys is this. I mean, we've seen MMM that thrived in Nigeria. We've seen companies like the Map that also thrived and went away with billions of Nigerian money in, you know, of course, they're all scams. We've seen MBA, I think MBA Forex and stuff like that. And even now, even up to now, we're seeing Nigerians still fall for these scams regularly. And my question to you guys is, what are these red flags? What should, you know, as a young investor that is just coming into the space, what should be a pointer to me that I should run away from this investment, or this investment does not seem like it is? Because we see every single day, I get messages from people. People are always telling me this investment, they're promising 10% monthly. And, you know, and all that. People are basically diving in and putting in their hard-earned money into all these investments. So what are these red flags? I'm going to start with Ajibola. So tell me, what do you think is a red flag to you?
For me, a red flag is anything that promises over 20% per annum is, you then have to, I know I'm in high risk territory, do you see, end of, and then, I mean, so if I use 20% as my benchmark, you can imagine how far away I'm running when someone says, well, I return 5% per month, bro. Yeah, that's it, man.
All right, thank you. Kalu, do you have any comments on that?
Yeah, lots of red flags. I mean, the first thing is registration, right? These are minimum guidelines. It doesn't mean if these are minimum. First of all, CAC does not matter. So it has to have a SEC license. So CAC, EFCC does not matter. It has to have a SEC license if it's marketing publicly, right? So if it does not have a SEC license, you don't invest at all. If you are invested in it, you want to make sure that you are paying your check to the name on the CAC. So if the company is Kalu, you want to write a check to Kalu, not to Tokumbo and Sons. That's one way to want to protect yourself. You want to make sure you get what you are paying for. So if you're paying for something, get a contract from them. I'm going to do this, I'm going to do this. Get a contract, give someone to read before you invest. Then the last one is all this, if someone starts to offer you a fixed return on a variable product, that's false. You can't do that. Stockbrokers do not offer a fixed return on a variable product. So if anyone's telling you, I'm going to buy shares for you, but I'll give you, even if it's 1% per annum, that's wrong, that's unethical, and you should not invest. They can't do that. Those are red flags for you. There's no way you can, the only way you can not fall victim is not to be greedy, right? But greed is how you invest, because if you're not greedy, you can't make money. So you want to be careful that you have that line between greed and actually making, seeing a good opportunity, right? But 20% a month, 10% a month, come on, guys. You should see that coming like, like you, I know that's just not real. But every day on my inbox, I get people saying, oh, I invested in this, I invested in that. And you're like, Jesus, didn't you see it? It's right there. This is fraud. But I get it. People, that's what I'll say. Do those minimums. And once someone promises something to you, I don't think you should invest. Always ask people. Never invest alone. Take it, show your people, someone else to take a look at it, and then both of you can agree. But never invest alone, right? Yeah. Check your DM, sir. You,
all right,
sir.
thank you. Okay, I will definitely. Also, let me just move to Ola next on what red flags for you.
Just to add to what Carlos said, so he talked about SEC licenses. So to know that a company has a SEC license is on their website. There's a list of companies on their website. So because people might not know, the SEC is the Securities and Exchange Commission, and they have a website. Every company that is registered with them and is stated, and then what they are registered or licensed to do is also stated. So they must be doing what they are licensed to do. And then another thing to also explain, when people say 10% per annum, 10% monthly, like, guys, people don't really understand what it implies. If you give me 50K and I'm promising you 10% monthly, it means I'm going to be giving you 5K. It means that in a year, I've given you your 50K back. The question is how many businesses can actually afford to do that consistently year in, year out? It is almost impossible. So when people offer these high returns, right, think about what it means in terms of them being able to deliver that to you, right? And then realize that it's not possible. So when they say, some people think 10% is small because they don't really understand. So I'm trying to break it down, that when we say even 5% monthly is a lot, because if I can afford to give you back double your money, why do I need you? Right? So we need to understand what they're saying. So yes, as Carlo has said, I don't think I need to add anything. I just needed to like unpack it because people actually don't understand what we are saying, but just to unpack it more. Yeah.
Thank you so much for that, Ola. So Dolapo, yeah, basically trying to get your take, and also if you can give us more of like a red flag in the real estate space also that people should watch out for.
I think for somebody getting onto the property ladder for the first time, what you should be looking at is track record. Real estate is extremely capital intensive, like I've said multiple times, and what you don't want to be doing is getting into anybody's first project. I think there are multiple credible people that can come up with a first project, but if it's your first time investing, you're better off finding somebody that has a referenceable track record that you can look and say, okay, they executed this project, there are people living there, or they've sold this land and they've moved on to another project. That track record is something that can help you at least de-risk the investment to a certain percentage. Not completely remove all the risk, but I think that's one thing that you can look to avoid any red flags. The other is just the title on the land, if we're speaking specifically about that. And there are lots of resources online about how to perfect the land process or what to look out for when you're trying to purchase that. But yeah, those are the two things I'd say.
All right, thank you so much, guys. I've been seeing the audience, the chat box has actually been bubbling, and I want to appreciate you guys and also the panelists also for responding to some of the questions that have been asked of them. I want to appreciate you guys for doing that. And also I appreciate the engagements. I think Ola had a lot of engagements on use of the word blue. And also Kalu was also responding to questions, same as Ajibola and Dalakwa. So thank you guys so much for that. And we have basically come to the end of the session, but we're not done yet. We're still going to take a Q&A, but before we do the Q&A session, we have a message from our sponsors, Bamboo and Quaco. So I think they're going to be queued in now. Tayo?
All right, Jibola, can you hear me?
Yes, go ahead, Tayo.
Oh, yeah, great. I already announced Bamboo is giving out some free stocks for students, and all you need to do is to register for the webinar, download the Bamboo app, create an account, and trade with at least $20. I think $20 should be maybe around 10K. You send your Valley student ID and Bamboo account username to info@nairametrics.com. You're going to get a form that you fill, then you get your free stock. So there's an information on the Nairametrics social media page where you can just follow through with that giveaway. Thank you, Ajibola.
All right, awesome. So I think that's it for the message from our sponsors. And next thing we're going to do is dive into the Q&A. So I have a question here. We've had so many questions, but thanks to the guys at the back end, they've actually helped us to sort it out. So the question is, first one I have here is, what can you say of the political risk of investments in Nigeria in respect to the 2023 elections? I don't know, Carlo, do you want to chime in on this question, or maybe Ola or Dolapo, Ajibola, anybody can take a stab at this. It's thrown to all.
I'll take a quick stab at it just from the real estate perspective, and then I'll let
all right.
But in the real estate market, what we usually see before elections, pretty much every cycle, is that there's a very big slowdown in decision making. So in real estate market, of course, I mean, I keep saying the same thing, capital intensive is a lot of money. So people want to make sure that there's sufficient stability in the market before they decide to make that investment. And this also applies to corporate occupiers, so people that occupy shopping malls, office buildings, industrial complexes, before they decide to move, expand, or enter into the country for the first time. If there's an election pending, especially one that might involve a change of power in an emerging market like Nigeria, it's one that just makes everybody a lot more cautious. So what we see is that things that should have taken 1 to 3 months might stretch out to a year or potentially longer. But I think from a real estate perspective, that's what we see. That's what we typically see.
All right, thank you. Does anybody else have any contribution? Ola, I saw that you unmuted your mic at first. Maybe you want to take a stab at the question.
So when it comes to regular Nigerian elections, right, there's heightened security risk, but there's usually a flow of liquidity. You will realize that a lot of transactions will be done to bring out cash, which brings cash into the system, which also moves some certain sectors, right? So like we talked about at the beginning, where we said with every challenge, there's always an opportunity. If you are selling bulletproof cars, you would make a lot this year, right? But if you are in agric and you have to ship or move things from the north to the south, you will have a lot of disruptions, right? So it's about positioning in line with what is happening, right? That's what I would say.
All right, thank you so much. I think, Ola, you need to go. I think you've messaged me that you have to go. So why don't you just say goodbye to the audience before you drop off?
Okay, thank you so much, everyone. Thank you to the Nairametrics team for the invite, and I trust you guys had a good time and learned so much. The most important thing is to take action. I always say you can't outsource your health and your finances. You have to engage. Nobody can go to the gym for you. Nobody can eat broccoli and vegetables for you. You have to do it yourself, and it's the same thing with your finances. So as many of these things that you can attend and learn, very important, but most importantly, taking action. As little as possible, baby steps, they add up, but you have to take action. Thank you, guys. Thank you, everyone. And well done to all the panelists also. Thank you.
Thank you so much for coming on board, Ola. Appreciate it. So let me quickly go into the next question because we're our time is fast spent. So which is better, to keep USD savings in the bank without interest for a year, or convert to NGN, which is the Naira, and put into a 20% investment fund? What effect will inflation have? Kalu, do you want to take that?
Yeah, so it's a maths question. It's essentially asking what is worse? Is it -15 or 0? That's the question. Inflation is 15%. So if you hold Naira, you lose 15%. So whatever you gain, you're going to take out 15 from it. Dollar doesn't have a Naira exchange inflation. There's an inflation in dollar terms. So inflation in the US is about 7.9% today. But that's a bit transitory, right? When the supply chain does straighten out, it'll fall. So if you hold Naira, you've already lost 13 to 15%. So the only way you want to hold Naira is if you can make more than 13%. And that just gets you to 0. So if you make 13% or 14%, that just takes you to 0 in Nigeria before you then make a real return. But if you hold the dollar, at least you're at 0. You haven't gone negative. That's the way I'll put it. So, yeah.
You haven't even included currency risk as well.
There's no risk. If you just hold dollar, then you're holding dollar.
I'm saying like with the Naira.
I wouldn't hold Naira. I wouldn't hold Naira if I'm going to give one at 90 days. I wouldn't hold Naira.
Okay.
Fair enough.
So I'm going to take one more question, guys. My last question, because time is fast, like I said. My last question is directed to Dolapo. What do you think is the performance and risk level of these real estate startups, the new startups we're seeing today? Can you please mention some?
Okay, yeah, so I mentioned one earlier, Kebble, and somebody in the chat also mentioned another called Square Roof. Yeah, they're typically saying that they can get between 10 to 15% per annum. So I think you can check them out and see if there's something that you'd like to pursue.
All right, thank you. So I think that brings me to the end of the Q&A session. We're sorry, guys, we couldn't take your questions, but I've been seeing Kalu, I've been seeing Dolapa, I've been seeing Ajibola answer questions in the chat box. So thank you so much for coming on board. Tayo is going to give the closing remarks and then we'll call it a day. And again, thank you so much. You guys have been fantastic. To all the panelists, from Olaja just left us, to Dolapo, to Ajibola Lawa, to Kalu. I really appreciate the engagement. It was actually a very, very informative and fun session. I'm sure the audience, no one can say they didn't gain any knowledge from all that has been said by you guys. So thank you so much. Appreciate it.
Yeah, thanks a lot, Ajibola, and thank you to all our panelists and obviously participants as well. I think there are a lot of takeaways that I took from this webinar. I think one of the major things I took was low time preference, right, for your investments. You kind of need to look and think long term and obviously get as much information as possible. And that's why the Nairametrics team as well hosts webinars like this, on a monthly basis so that you can stay informed. Obviously, we have the Nairametrics website where you can get financial information to stay educated. We also have series of shows and programs that we have on Clubhouse, on YouTube, on Instagram, where we educate the general public on investments. And I wish you guys a very great weekend and have a great time. Thank you so much for attending the session.
All right, before everyone goes, quickly, some of the unaddressed questions are going to be answered on our EMM show. It comes up on Classic FM on Wednesday, 8 a.m. So definitely tune in then to get some of your unanswered questions will be answered on that day. I also want to mention that our sponsors, we really appreciate you guys. Bamboo, Quaco, and excuse me, and FPL Media. Thank you so much for sponsoring this event. We really, really appreciate it. And I also want to remind you guys about my own show, the Crypto on the Go. Crypto on the Go is going to be released tomorrow. So you guys should tune in for that to listen to what I have to say. I see Ajibula Lawad is smiling in the background. So yes, you guys need to listen to Crypto on the Go. And it's going to be published on our Instagram page, and the link to the YouTube will also be dropped there. So thank you guys so much for coming on board, and have a lovely day.
Thank you. Thank you very much. And yes, the recording will be available. You guys should subscribe to our YouTube channel. It will be posted on YouTube. Thank you so much.
Adetaya, can we talk? Call me, please.
Yeah, definitely.
Just give me a call right now.
All right.